On June 15th, 2026, something happened that Wall Street had been waiting years for. SpaceX went public, and within hours of its first full day of trading, the entire stock market exploded to all-time highs. This wasn't just a company listing on an exchange. This was a seismic event that reshuffled billions of dollars overnight and left investors scrambling to understand what just happened. Let's put this in perspective. SpaceX debuted with a valuation of roughly $2 trillion. That made it one of the most valuable companies on the planet on day one. Not after years of public trading. Not after slow institutional accumulation. On day one, the Nasdaq jumped 795 points. The Dow hit a brand new record high, and Elon Musk got a whole lot richer. To understand why this IPO was such a massive deal, you have to go back to the beginning. SpaceX was founded by Elon Musk in 2002 with a borrowed idea and a borrowed dream. That private companies could do what only governments had done before. Send rockets into space. Most people laughed. The aerospace industry laughed loudest of all. In the early days, SpaceX nearly went bankrupt 3 times. 3 failed rocket launches nearly wiped the company out entirely. Musk reportedly told friends he was down to his last dollar. He had poured everything from the PayPal sale into 2 companies, SpaceX and Tesla, and both were on the verge of collapse simultaneously. It was one of the most dramatic moments in modern business history. Then the 4th rocket launched, and it worked. That moment, in 2008, saved SpaceX from total destruction. Shortly after, NASA handed the company a $1.6 billion contract. The laughing stopped. Over the next decade and a half, SpaceX didn't just survive, it completely dominated. It became the world's most active launch provider, beating Boeing, Lockheed Martin, and even national space agencies. By 2025, SpaceX was being valued in private markets at around $350 billion. Then Starlink, its satellite internet division, started printing serious money. Then Starship, the most powerful rocket ever built, started flying successfully. The valuation kept climbing. Private investors were desperate to get in, but SpaceX stayed private. Until now. The IPO announcement itself caused chaos. Institutional investors flooded banks with calls. Retail investors posted on Reddit about mortgaging their houses to buy shares. Financial media covered nothing else for weeks. The ticker symbol SpaceX started trending on social media before the stock even existed publicly. The demand was unlike anything Wall Street had seen in years, maybe ever. But here's where the story gets genuinely surprising. SpaceX didn't need the money. The company had been generating billions in revenue from government contracts, commercial launches, and Starlink subscriptions. So why go public now? Why open the floodgates to public shareholders, quarterly earnings pressure, and activist investors? The answer involves politics, timing, and a peace deal nobody saw coming. On the exact same day SpaceX made its IPO debut, the United States and Iran announced a framework deal to end their war. Oil prices crashed. Stocks worldwide surged. It was a 1-2 punch of historic proportions hitting the market simultaneously. The SpaceX IPO and the Iran peace deal landed on the same morning. The result was the biggest single-day stock market rally in recent memory. Nasdaq futures surged. The Dow popped. Oil dropped sharply as traders priced in the reopening of the Strait of Hormuz. And right in the middle of all that chaos, SpaceX started trading. The timing was almost too perfect. Some analysts later joked that Musk had somehow coordinated the Iran deal himself just to juice his own IPO. That's probably not true. Probably. Here's what the numbers actually looked like. SpaceX opened trading with a market capitalization that placed it immediately among the 5 most valuable companies in America. For context, General Motors, Ford, and Boeing combined are worth less than SpaceX on its first day of trading. The aerospace and defense sector had its single biggest day of gains in over a decade. NVIDIA surged on the news too. Why? Because SpaceX's Starlink and future space infrastructure require enormous amounts of computing power. AI chips power satellite operations, trajectory calculations, and autonomous docking systems. Every major SpaceX mission runs on cutting-edge processors. NVIDIA is the dominant supplier. SpaceX going public was essentially a second IPO for NVIDIA's future revenue stream. Micron and SanDisk also popped on the news. These are memory and storage chip companies. SpaceX's Starlink constellation, over 6,000 satellites and growing, needs massive data storage infrastructure on the ground. As SpaceX scales globally, the demand for that infrastructure scales with it. Investors immediately started connecting those dots, and the chip sector lit up like a Christmas tree. But let's talk about the elephant in the room. SpaceX lost money last year, billions of dollars. The Starship development program is extraordinarily expensive. The company is building not just rockets, but an entirely new category of interplanetary transportation. That kind of ambition burns cash at a ferocious rate. And yet investors lined up to buy shares at a $2 trillion valuation anyway. Why? Because Wall Street isn't just buying what SpaceX is today, it's buying what SpaceX could become. Starlink alone is projected to generate tens of billions in annual recurring revenue within a few years. Then there's point-to-point hypersonic travel on Earth using Starship. Then there's the lunar economy. Then there's Mars. Investors aren't buying a rocket company. They're buying a bet on the future of human civilization. This is the same logic that made Amazon look insane in the late 1990s. Amazon lost money for years. Investors were mocked for holding the stock. Then AWS happened. Then Prime happened. Then the losses became the greatest investment story of the 21st century. SpaceX bulls are making exactly that argument. Except the market they're targeting isn't retail, it's the entire solar system. Now let's talk about Elon Musk's personal stake. Before the IPO, Musk owned a reported 42% of SpaceX. At a $2 trillion valuation, that stake is worth roughly $840 billion. On paper, that single number is staggering. It puts Musk's SpaceX stake alone in the conversation for the world's first trillionaire, a title that has been circulating in financial media for months now. CNBC's Morning Squawk actually mentioned the world's first trillionaire conversation the same morning as the SpaceX IPO. The timing was not a coincidence. Between Tesla shares, SpaceX equity, XAI, X, and the Boring Company, Musk's combined net worth on paper cross numbers that have no real precedent in human history. We are watching wealth concentration at a scale economists have never had a model before. But here's what the SpaceX IPO revealed about the stock market that almost nobody is talking about. According to a Yahoo Finance analysis, the IPO exposed a stunning structural fact. The U.S. stock market has been starved of major new listings for years. The pipeline of truly transformational companies going public had dried up. SpaceX didn't just add one stock, it added a category. Bloomberg ran a headline the same week saying simply, "The stock market will get more stock." What they meant was that SpaceX's successful IPO has now unlocked the floodgates. Other mega-private companies that have been sitting on the sidelines, watching, waiting, afraid of the market volatility, are now reconsidering. The SpaceX IPO is the signal that the window is open again. Think about the companies that are still private and could follow SpaceX's path. Stripe, valued at over $65 billion. Databricks, pushing $60 billion. Klarna, which already filed for a U.S. IPO. The private equity and venture capital world is stuffed with massive companies waiting for the right moment. SpaceX just told them, this is the moment. Get in line. Morgan Stanley's chief strategist Mike Wilson also weighed in this week. He said the U.S. stock market rally is broadening. It's not just the Magnificent Seven anymore. It's aerospace, defense, semiconductors, and now space infrastructure. The SpaceX IPO is accelerating a rotation into new sectors that could define market returns for the next decade. Wilson's message to clients: this rally has more room to run. RBC Wealth Management echoed that sentiment, noting that corporate earnings are brightening and the economy is holding firm despite earlier recession fears. The Iran deal removed one of the biggest geopolitical risk premiums from oil markets. Lower oil means lower inflation. Lower inflation means the Fed has room to breathe. And when the Fed breathes easier, stocks tend to fly. Speaking of the Fed, Kevin Warsh just took over as Federal Reserve Chair. His first meeting is happening right now. Markets are watching every word. Warsh is known as more hawkish than his predecessor, but even he can't ignore the macro tailwinds. A U.S.-Iran peace deal, a $2 trillion IPO, and record corporate earnings don't exactly scream rate hike. The market knows it. So what does all of this mean for regular investors? Here's the honest answer. The SpaceX IPO is a once-in-a-generation event, but it also carries once-in-a-generation risk. The stock surged on day one. That means the easy money, the IPO pop, is already gone for most retail investors. Buying into a $2 trillion company that's still losing money requires real conviction or real risk tolerance. History gives us a useful warning here. When a company goes public at peak hype with a sky-high valuation, the short-term performance can be brutal. Uber fell 40% after its IPO. Rivian crashed 80%. Even Facebook dropped nearly 50% in its first year of trading. The IPO pop is real, but so is the post-IPO hangover. SpaceX will not be immune to this pattern. There's also the Musk factor. Elon Musk is simultaneously running Tesla, SpaceX, the Boring Company, and now a publicly traded SpaceX. He is also deeply involved in U.S. government policy through Doge. That's an extraordinary number of plates spinning at once. Any one of those plates wobbling could send SpaceX shares into a tailspin regardless of how good the underlying business is. Tesla stock actually did something interesting on the same day as the SpaceX IPO. According to Investors Business Daily, Tesla moved in a notable way while SpaceX was surging. The two companies share Musk's brand equity in a very real sense. When SpaceX wins, Tesla often gets a halo effect. When SpaceX stumbles, like after a rocket explodes, Tesla has historically felt the shockwaves too. Zoom out even further, and the SpaceX IPO tells us something profound about the American economy in 2026. The companies that are defining this era, the ones capturing the most wealth, the most talent, the most imagination, are not oil companies or banks. They are technology and space infrastructure companies. The economic center of gravity has shifted, and the stock market is just catching up. The Wall Street Journal ran a piece this week noting that stocks have even more room to fly if the Strait of Hormuz fully reopens. That's the critical waterway through which roughly 20% of the world's oil flows. If the Iran deal holds and Hormuz opens fully, oil prices could fall another 15 to 20%. That would be an enormous economic tailwind, essentially a massive tax cut for every business and consumer in America. So the backdrop for the SpaceX IPO could not have been more favorable. Peace in the Middle East, falling oil prices, record corporate earnings, a broadening stock market rally, a new Fed chair who can't afford to rock the boat, and a $2 trillion rocket company finally letting ordinary investors buy in. In financial terms, this is what they call a perfect storm, except the storm is going up, not down. The motley fool called June 16th, 2026, a potentially pivotal day for the stock market, one that could set the stage for everything that happens next. They weren't wrong. The combination of the Iran deal, the SpaceX trading debut, and the Fed meeting created a pressure cooker of market-moving events. Whatever direction things broke, the move was going to be large. It broke upward, violently. Here's the bottom line on SpaceX. This is a company that nearly died 3 times, survived on a single successful rocket launch, and spent 2 decades building technology that no government could match. It went public at $2 trillion on one of the most chaotic and historic days in recent stock market memory. Whether it justifies that valuation over time is the trillion-dollar question every investor is now asking. What we know for certain is this: the SpaceX IPO changed the market. It unlocked a new wave of potential listings. It added a new sector to the investing landscape. It made one man's net worth approach levels that have never existed in human history. And it happened on a Tuesday in June, right alongside a Middle East peace deal, while the whole world was watching. History doesn't give you many days like this. If you want to stay ahead of the next massive money event, the next IPO, the next market-shaking deal, the next billion-dollar story that changes everything, hit subscribe right now. This channel covers the biggest, most dramatic stories in money and business every single week. You don't want to miss what's coming next. Hit that subscribe button, and we'll see you in the next one.